Hello, everybody. Welcome to Weekly Market News. Today is Monday, 8th of February, and we are beginning the new week, the second week of February, with a fairly positive note that was mainly influenced by the last week extremely good performance of stock indices around the world as the risk on sentiment was back on the track, and stock markets in the US, stock indices like S&P 500, Nasdaq, Dow Jones were able to close at the new record highs. So we are back in the track we are used to see in the markets, and nothing really is changing as the overall fear about the speculators and short squeeze on the stock market kind of disappeared pretty quickly, and we are, like I said, back on the track as last week. Specifically, last week was one of the best weeks since November, as we were able to close all 5 sessions from Monday to Friday in the green, so in positive territory. You can see the rise was kind of steep. We had a little stop here on Wednesday, and then Thursday, Friday was again some gains. We were able to see another record highs, breaking them record highs, and obviously, as right now we are waiting for the market. What is it going to do? Where is it going to move? What kind of things can we expect from them in the week ahead? So, like I said, stock markets in the U.S. Very positive last week. You can see here the strong area of support and resistance, which might get tested this week, and might be a very good level for a pullback coming for the market to keep rising. So we will see how this thing will play out, and how the market might react to this level, or if it will keep on rising another to another record high. So we will see how this will play out. But like I said, the overall sentiment is very positive, as the U.S. Senate is ready to confirm new fiscal stimulus package from new U.S. President Joe Biden, which will be $1.9 trillion. It will also include direct checks to American citizens. I think this checks should be $1,400 big. So again, this will have a tremendous impact on private sector, and as well, it could have a tremendous impact on stock markets. Is something we have seen 2 weeks ago, which was a big fear about the speculators and about the retail sector in the stock markets, was fueled partly by the fiscal stimulus package and by the direct checks and by the free money that Americans had from their government. So, like I said, very positive sentiment on the stock markets, as obviously the earnings season is still going on. About 85% of companies from S&P 500 indexes, they reported better than expected earnings. So this also is something that adds fuel to the fire, and keeps pushing the valuation a little higher. As we are speaking about the earnings, let's look at the earnings on the week ahead, what we might expect from the market. On Monday, overall, the big companies, they already reported their earnings, so we cannot expect anything big. No big companies are going to report in this week. But again, we have some interesting names like Twitter. We have Cisco, General Motors, Uber. There's Coca-Cola Company, Pepsi, Walt Disney, AstraZeneca, which will be very interesting. But for the fourth quarter, probably not that much. But they right now are battling with some problems about the new mutation, about the new strain of virus from South Africa, and as right now it's being shown that the vaccine is not that effective against these trends. So we will see how this thing will play out and possibly affect the market. But like I said, from the earnings perspective, we do not expect any big names. So stock indices should not be influenced that much from the earnings session, from the earnings season this week, and from some unexpected reports. So that's about it for the stock markets. Like I said, in the US was a very positive week, as well as in Europe, which was kind of included in the wave of positive sentiment on the market. You can see that we were able to close much higher than we were. We also kind of broke here the descending candle. The market was moving lower and lower, and right now it broke it close to another record high on the DAX, and we probably will keep on rising. But as you know, DAX is a much more volatile market than the U.S. stock indices. So we can expect some big moves here. We will see what the market macro calendar is holding for us this week, and maybe can expect some big moves, maybe some corrections. You know, we are used to this on DAX, and it might really well happen. You know, there's a big rise, big steep rise last week, and obviously these steep rises are usually followed by either correction. So the market may do some a little correction here, or it can go sideways, and we can go like on stairs. So steep rise, sideways, steep rise, sideways. We'll see what will happen there. But me personally, I do not expect any further gains that will be that big as last week's. Forex, extremely interesting week on Forex markets, as you were able to see how the risk on sentiment and overall positivity on stock markets have not influenced the US dollar that much. US dollar was surging. It's surging because there is some things going on bond markets in US. The bond yields in US are one of the highest in a year, fueled again by fiscal stimulus package, inflation expectation. So this usually helps the dollar. And you can see here, dollar put the pressure on euro, put the pressure on several other currencies against the US dollar. Euro even pushed below 120. On Friday, though, we had a correction there, so we were able to close above 120. So it was a false breakout. We'll see what happened. What would happen next here on 120.57 is a two-month low, which was breakthrough. We'll see. We might test this, and we might even test the higher levels, about 121, where again, one of the most watched psychological levels will be there. So we'll see how this thing will play out and what will happen there. But me personally, I expect the same thing from euro, like from DAX. So I expect we are going to go sideways. Do not expect any major news, as we do not expect even any major macroeconomics events this week. GBPUSD was also influenced by the moves on US dollar, but as well as on a meeting of Bank of England, which was scheduled due on Wednesday or Thursday. Nothing really major happened, although the meeting was a bit positive for British pound, as central bank did not move any further to move the interest rate to negative territories below zero. They kept the rates at the same level as well as QE. So like I said, nothing really interesting happened over there, but GBP is on a fairly positive note. You can see that the candle here that we were kind of testing from both sides, we got tested again on on 137.46, and right now the GBP is descending a little bit, and here you can see very strong level of support here on 136.34, where we definitely can look for another pullback to back to the middle of this price range. USD CAD also interesting, but this will be one of the last currencies, Forex currencies that we're going to look at, because it's also quite interesting things happen over there as the unemployment rate have risen a little bit, about 2% for the last month. So that's a bit negative for Canadian dollar, but you can see it's a little bit surging. USD Canadian dollar is still on a fairly positive note. You can see unemployment change here, and you can see the unemployment rate has risen to 9.4 from 8.8%. So that's a small rise, but not something that we would want to see in terms of economy recovery and recovery expectation for the economy. So this can be, like I said, quite negative for Canadian dollar, but it's not yet. But we'll see how it will possibly react, how the market will react to these events. Let's look at the gold and commodity sector. Last week was a bit negative for gold, as it was dragged down with the steep fall on a silver, which have risen to levels above $30, but did not hold the gains and declined to about $25, $26, and obviously gold has gone with the silver, and rising dollar did not help gold. So the gold, you can see, tested levels a little bit below 1800. You can see 1800 right here. Test the level, retreated. We will see. Me personally, I expect from the market to test the level here on 1833 pullback and break through this level and kind of continue in this continuation declining trending candle. So this is my expectation for gold for this week. And oil is quite interesting. What is happening? It keeps rising. Obviously, the supply side did some adjustments last week. But just looking at the price and looking at the time, you can see the price is exactly at the point where we were for the most of the year 2019. So any further rise on oil is very unlikely, mostly due to the demand, which is still under pressure. And yeah, the main and the only thing that will be interesting here and that will set the tone for further months will be the supply. So we will see how the Russia will react to the higher prices, how Saudi Arabia, how different OPEC producers, as well as US shale producers, how they will react to the rising price of oil. They can react with bigger production, and with bigger production, you can again see the supply be bigger than the demand, and the price can fall sharply pretty quickly. So this is something that we have to watch out for the week ahead. So this will be it for the markets. Let's look at quickly what we can expect from the markets from macroeconomic standpoint. On Tuesday, there is nothing much to be released except JOLTS, job openings. On Wednesday, we have CPIs from US, so inflation from USA, and as well as stocks exchange of oil Bailey speech, Jeremy Powell speech. On Thursday, we do expect monthly report from International Energy Agency, also from OPEC, and obviously claims, initial jobless claims in the US. On Friday, manufacturing production and GDP numbers from UK, and for the rest of the session, nothing really much. This is one of the weakest week in the terms of macroeconomic news. We do not really expect anything from the market, so sentiment, maybe possible a correction or sideways trend on the stock markets, and we'll see how the US dollar will react to the rising yields from US bonds. So this will be it for today's video. Thank you guys for watching. If you have any comments or questions, leave it down in the comment section below the video on YouTube, and I will see you next week.